recipes for technical trading success in Cook's Kitchen.
Hey everybody, Cooker here, back with another edition of Cook's Kitchen. Looking back last week, what did I tell you? I said, don't be afraid of the hawkish Fed. And that was the video I recorded before the FOMC shindig Quant Fest let out, and they gave us their projections and the presser and all that, because I recorded that at noon Central Time. And I said, even if we get a dip, even if they're too hawkish, buy stocks. And some of my top recommendations you can see there were Nvidia, Shopify, Square, triple long the NASDAQ and the trade desk. I think I even mentioned AMD because I was long AMD, and so we got a great earnings report from them last night. One stock I'm glad I did not recommend was PayPal, and Square is down another 10%. Because let's just look at what happened with PayPal. It was a disaster. I've never seen it down this much ever in one day. Down 25%. Okay, there's Shopify. I actually don't know why Shopify is pulling back so strongly today. We'll figure that out. But I still think remember I said I wanted to buy it under 800, and you're getting shots to nibble here at 800. So I think it's a play to make. But let's look at the disaster in PayPal. The volume here is, oh my gosh, over 100 million shares. Just total, get me out, get me out, get me out. Because, anybody who survived the ride down from 300 never thought they were going to see it below, 125, and especially in one day. So there's a game you need to be aware of on Wall Street on how analysts at investment banks operate. They do the research. They do the industry research. They do the company research. They're on the conference calls. They crunch the spreadsheets. They model the revenue and earnings. They live and breathe this stuff. You could probably wake up an analyst for PayPal. You could wake them up in the middle of the night and say, what's projected top line growth next quarter, and they could rattle it off, and they could tell you why, and they could tell you about the segments. They live and breathe this stuff. They got to put it in the spreadsheets. But sometimes they're tracking trends in revenues and profits, and they just get it wrong, or they're modeling something. They're modeling a trend that already fell off a cliff, and so what I want to show you is the capitulation by Wall Street analysts this morning that is taking the stock down so much. You see the guy at Jefferies going from 200 down to 145. That's this top one here. Let's see. The guy at Truist going from 200 down to 130. So those are the real bears. Nico Securities 160 down to 125. But in the context of, Jefferies and Truist were probably on the reasonable side, given the slowdown at PayPal, because PayPal missed, but it was the guidance really, the poor guidance that's taking the stock down and taking the view down, right? So these analysts all have to change their models, and they got to take down revenue and EPS projections. But you look at somebody like Canaccord, this one at the bottom, and this is just our partner news, so a lot of stuff here from different sources. But, these are the headlines. The guy from Canaccord took the price target from 315 down to 215. So this guy was still way overly bullish on the outlook for PayPal, and, basing it on, trends of 2 quarters ago maybe, and then comes out to 215. And I don't think it sees 200 for a while. So that's the PayPal story. Let's look at Square while we're talking fintech getting clobbered. So Square is down another 10% in sympathy. But, we already had these lows down to 100. Here below 105 was a great place to buy, and I didn't. Looks like the stock got, as low as, I don't know, maybe 101 on January 28th. So the good news is PayPal's getting decimated, but Square is absorbing it, right? The price damage, collateral damage is being absorbed by Square, and we're not even threatening the lows of last week near 100. So I think it sets up a really good buy for Square right here. In fact, I might buy some today. So that's the take there. All right, who else do we want to look at? Let's just look at a bunch of stocks because, while the NASDAQ was having its 17% correction at the lows last week, the S&P held that 4,300 support. And so that's why I said there's a slowdown in the selling momentum. There's no bad economic data, and so the Fed might threaten to hike a few times. It's not going to crush the stock market. And yeah, so you got all these bounces. We have a lot of charts that look like this, where after this consolidation below the October lows, which looks like the NASDAQ chart, you get this bounce. So the trade desk, we were buyers at 60, I said, back up to 70. Very nice to see. Let's look at Nvidia. Nvidia, I did not add. I should have added at 220. And this is where I say you got to have a plan. I mean, look at this. Buying under 220 was a no-brainer. What happens, the way I describe this is, okay, so look at what happened in the fall. Nvidia, big ramp up to new highs, leading the stock market, just like one of the FANGs, and then this slow grinding, sort of sickening digestion as the software is melting and the whole stock market's melting. But this is where you got to be ready to buy. You're not buying up here. I never told anybody to buy Nvidia at 300. In fact, we were ready to take some chips off the table. But then you have to be ready for this. You have to have a plan. So what keeps people from having a plan? Well, lots of reasons. Anybody who doesn't have a plan on the stock market is probably not somebody who can run a business. But then what if you do have a plan and say, gee, I'd love to buy Nvidia at 220 if I got the chance in a steep decline, in a panic? Well, saying that as a wish is one thing, but actually having a plan where you're watching 4 or 5 stocks you want to buy when this happens, then you have to block out all the noise. You have to let the panic come to you when everybody else is throwing them out, and then you have to execute. You say, I'm going to buy Nvidia 220, and either you put your order in or you're just ready, and then you just follow the plan, because these kinds of things work over time, right? You're not going to buy the perfect low. That's what everybody's afraid about. Oh, geez, what if I buy 220 and it goes to 210 or 205? So what? At least you didn't pay 320, right? You're not going for perfection. You're going to get, the you want to sell the upper third and buy the bottom third and do it as many times as you can over and over again. And as you get better at it, sometimes you sell the upper 15% and you buy the bottom 15% of a given range in the quarter. So, and you don't even get these shots every quarter, right? So, okay, that's my Nvidia rant. Let's look at AMD. So AMD, great earnings. They love the guidance. The stock went as high as 130. It's trying to hold above 120. I really want to see it hold above 120. And make this gap mean something. That it's not just blowing out the bears or the shorts. That real buyers are coming in here. Okay, who else do we want to look at? Let's look at Google. Because just phenomenal numbers from Google, and sales growth. Look at that. You got to love a gap like that, right? Oh, my God. Anybody who was short Google. Wait a second. What was how much are we up here? Oh, God, it's showing black. But, I mean, this is a huge move up. And the macro or the fundamental theme here is that YouTube ads are just killing it, right? Advertisers from small to medium to large are learning that, yeah, Facebook is still useful, but look at the things we can do on YouTube. And most people don't know this, but here's a great factoid about YouTube advertising. If you make a YouTube ad and you set it up to be skippable, you don't pay if somebody doesn't watch past 30 seconds. So most of the time you're on YouTube, yeah, you're going to skip the ads. But once in a while, let's say something catches your ear, or you're letting the ad play, because some people accidentally let the ads play. They're doing something else. The advertiser doesn't pay unless it runs past 30 seconds. So somebody could let's say you got a catchy hook in your YouTube ad, and then somebody, hey, what's this guy talking about? And then they're watching past the the skippable zone. Like now they can skip it if they want to. They're watching into the skippable zone past 5 seconds, and they're watching 10 seconds, and they're listening to you, and they're watching 20 seconds, and then they decide, nah, he doesn't know what he's talking about, and then they skip it. So they watched all the way to 20 or 25 seconds, and you still don't pay for that ad. That's powerful. It's like more than fair. It's very equitable, that kind of structure. And so it's bringing more people to, and people want to do stuff with video because they realize they can have more of a connection with their audience, for branding, just human connection, everything. All right, who else do we need to look at? So I was telling you last week we were long the NASDAQ Triple Q ETF, which is it's the ProShares Ultra Pro TQQQ. So that ETF gives you 3 times leverage. So even though we were, holding in here, I actually got nervous on Friday because in the morning we made new lows that took out the Wednesday and Thursday lows after the Fed, and but most of my people hung in there with T Triple Q and made some nice gains there. So. All right, what else? We talked about PayPal, Square, AMD, Nvidia, showed you the trade test, Shopify. These were all great buys. Don't be afraid of the hawkish Fed. That's what I told you. And we dodged a bullet with PayPal, even though a few weeks ago I was recommending, hey, look for opportunities to buy PayPal under 170. These things happen, right? So. That thing ran into a freight train, and there's an egg on the face of a lot of Wall Street analysts there too. All right, what did I want to tell you? Oh, I was going to show you the ultimate scoreboard, because what's cool. So if we go to Zacks Services and then click on Zacks Ultimate, which is our premier stock trading membership. Most people don't know we have a portfolio that only short stocks. It'll short about 10 to 15 stocks on a running basis. And look at what you're looking at here is you're looking at our leaderboards for all the Zacks portfolios. So who's leading today is the short portfolio because they've been short PayPal. And the criteria is the Zacks rank. So if earnings estimates are headed down, then PayPal is a Zacks rank number 4 sell right now, but its estimates have been headed down for a few weeks, and so analysts have been, lowering their estimates, making the PayPal hang out in the seller of the Zacks rank, so the short portfolio could take it on, and it's up 25% today. It's a 31% winner over the past 30 days. This right leaderboard is the past 30 days. And so that's not even the total net gain there because this is just tracking back to 30 days ago. Again, this is on the left side is the action just today. Square is an 11% gainer because the short portfolio is also short Square. And it's also a 31% winner relative to 30 days ago. Geez, I had a stock in the top 5 here today. I had AMD up here. It was up over 6%, 7%. Actually, it was probably up 10% at one point. But if you want to learn more about the Zacks Ultimate portfolio or the short portfolio in particular, because I think there's going to be a lot of great shorting opportunities over the next couple of quarters here, just email ultimate@zacks.com and tell them Cooker sent you. All right, folks, we'll talk to you next week. In the YouTube description, there will be a link to the article version on Zacks.com, and I'll remind you about Zacks Ultimate and the short portfolio. All right, talk to you next week.